A certificate of insurance can help you win contracts or give you a completely false sense of security. Most businesses misunderstand what a COI actually proves and what it doesn't. Today I'll make it simple so you don't get caught in a liability trap. Hi, I'm Marty with JMW Insurance Solutions. We help business owners protect what they've built, including making sure contracts and certificates support your business instead of quietly exposing it. Certificates of insurance, COIs, are everywhere in B2B. You need them to start a project, work with a vendor, get approved by a property manager, meet a contract requirement, or satisfy a general contractor or client. Most business owners treat a COI like a proof of coverage card, and it is proof of something, but not everything people assume it is. Today I want to break down what a COI actually proves, what it does not prove, the common mistakes that create liability surprises, and how to use COIs correctly as a business owner. Here's what a certificate of insurance does prove. A COI generally confirms that on the day it was issued, certain policies exist. General liability, auto, workers' comp, and so on. It shows the insurer name, the policy numbers, the effective dates, the limits on those policies, and sometimes additional insured status depending on how it was issued. In other words, a COI is a snapshot that says, here is evidence that these policies were in force as of this date. That is helpful, but it is not the same as a guarantee of coverage. Now here's where businesses actually get hurt. The first misunderstanding is that a COI is not the policy. The certificate is not the full contract. The policy language and the endorsements are what actually control coverage. That matters because a COI might show general liability at $1 million, but the actual policy might have exclusions, conditions, endorsements, or limitations tied to the specific operations being performed. The COI is evidence. It is not the full picture. The second misunderstanding is that a COI does not guarantee a claim will be paid. Coverage is determined by policy terms, the specific facts of the claim, whether conditions were met, whether the activity falls within the operations described, and whether any exclusions apply. A business can have a COI, have a claim, and still end up in a dispute if the claim falls outside the policy scope. The third misunderstanding involves additional insured status. Many contracts require your client or general contractor to be added as an additional insured. Some people assume that writing it on the COI is enough. It is not. Additional insured status must be supported by the correct endorsement, and the specific wording of that endorsement matters. If it's not properly endorsed, you can end up in a serious fight during a claim over who is truly covered, for which operations, and under what conditions. The fourth misunderstanding is that a COI doesn't automatically include waiver of subrogation, primary, and non-contributory wording or other special contract terms. A COI may show a checkbox or a note, but the policy must include the correct endorsement for any of that to be real. Here are the three most common COI mistakes I see. The first is treating a COI as a substitute for actually reading the contract. Business owners are busy. They glance at the COI, see the limits, and assume they're protected. But contracts can transfer liability in ways that a COI simply doesn't solve. The second mistake is not verifying subcontractor COIs and getting stuck at audit time. If you use subcontractors and don't collect their COIs properly, you can end up with workers' comp audit surprises, liability gaps, and disputes over who is responsible for a loss. In many situations, if you can't prove your subcontractor carried their own coverage, the carrier may treat their labor as your payroll exposure. The third mistake is not tracking expiration dates. COIs expire, policies cancel, businesses change carriers. If you're not actively tracking COIs, you may be relying on proof that is no longer valid. Here's a simple system that works without a legal department. For every vendor or subcontractor, check that general liability is present with adequate limits, workers' comp is present if required, auto coverage is there if they drive for work, additional insured status is confirmed if your contract requires it, and the policy dates are current. Keep all COIs in a single organized folder by vendor name. Track expiration dates with even a simple spreadsheet. Vendor name, policy expiration, contact, renewal reminder. And before you sign a contract with terms you don't fully understand, get clarity first. It is far better to ask questions before you sign than to discover a problem after a claim. COIs are important, but they are not magic. They are proof that coverage exists, not proof of how a claim will be handled. The safe approach is to pair COIs with basic contract awareness and a simple compliance system. If you'd like us to help you set up a clean COI process and confirm that your coverages and endorsements match what your contracts actually require, visit us at jmwinsurancesolutions.com/business-insurance.